In one of my previous videos, I made a beginner's guide to drawing supply and demand levels. Well, in this video, I'm going to show you one step further of what constitutes as a stronger supply and demand versus a weaker supply and demand and how likely that trade level is going to work. So before we begin, do me a favor, hit the like button, subscribe, and leave comments. Let me know if you guys trade supply and demand zones and what you thought about that video I did last week on it. So let's jump right into it. Okay, so pretty much we had the supply and demand trade zones, right? Right here that we drew from the video I did, my previous video. But one of the things we want to look for that make this a very strong supply and demand zone or a very weak one is the move off of this level, right? Remember, we don't know this is a zone yet because we just drew it because price is over here. We go, hey, if it comes down, we want to be a buyer. But what we want to see is a very powerful upward move that where price never actually came back to retest this zone and then move higher. As we could see in this example, price just took off, right? It just went up and never even looked back. On the upside, we kind of see the same thing where price fell. It did retrace a little bit, but it never even got back into this level. So I still really like this level. This is also a very high probability type of trade that if we were to rally from here, come all the way back into the zone, I would say this is a very high probability of this trade actually working out. And I would want to take this trade for the short side with my stop going right above. Now, as we could see, what did price do? It came right down just right before the trade zone, and then we bounced. Okay. Now, where did this low come? If we zoom in right here, okay, now I drew it from this candle. Now we have two candles. If you wanted to, you could have drawn it from this candle, right? Because what we have here is a fair value gap. Okay, and so as price would come in, maybe its objective is to fill that fair value gap. But if you take this trade, you have more risk. Just something to think about, right? Maybe you go one here and then you add some down inside here. We don't know if it's going to bounce here or if it's going to bounce come directly into the zone. But what I do know is, as we could see, price literally came right to that level. Okay, so that is what a very high probability trade zone looks like. Okay, we could see the same exact thing happen here. We see a big push, a big fall. Okay, here's another very high probability trade, right? We have that big fall where price never retraces. If we drew a trade zone here, we made a new low, price rallies, and then it comes back out. Here, the same exact thing. We could use this candle with this low right here. That's the way I would trade this. Okay, not saying it's always the correct way, but if we took this, then price pulled right back here, filled that up, but we never filled in the fair value gap, right? And then it took off. But those are, again, we want to see big moves out, not choppiness. Those are high probability trade setups. Now, what would be a low probability trade setup would probably be something along the lines of something like this, right? Where we see price kind of make a low. If we drew, right, we could see it came down. Okay, and price kind of rallied, pulled back, it filled and then took off. But if we just saw kind of like a choppiness over here, then we would not want to trade that. I'm trying to find a good example of it. I would probably have to lean and say something like this. See how it's like choppy? We came back down multiple tests, 1, 2, right? Even 3 tests rally. And then what happens? We just blow right through this trade zone because we would use this red candle, draw it, right? So it comes down, 1, rallies, 2, bounces off, 3, right? And then when we come back into that zone, it blows right through. So these are trade zones that what we want to see are big moves off like this, right? And then if we come back, we just want to see like maybe 1 retest and then off to the races, not multiple retests. And that could be a telltale. So hopefully that kind of makes sense. But essentially, we want to see big moves up to sum this up. Big moves that haven't come back to retest, those are our highest probabilities. But then when we see just a lot of choppiness and sideways action in multiple tests or double bottoms, things like that, and then a rally and then comes back down, they are not as likely to work out because all these really are, in the bigger context of it, is a potential bear flag, right? And then we see the break to the downside. So hopefully that video helps you guys. But as always, let me know. Also, make sure you guys check out my video course. Links down below. And until next time, we'll talk to you soon.